Hello and welcome to this week's crypto update. So what's been happening this week? Well, it's a busy week. We have Trump out meeting the Chinese leader. We have the Fed having their meeting, and we have all things AI. How's this all affecting the economy, risk on assets, and crypto in general? Well, let's have a look. So first and foremost, the Fed did exactly what it was expected to do. It cut interest rates by 25 basis points. That was pretty much locked in. I think it was like something like 97% expected to happen. And so how did the market react to that? Well, cutting interest rates means money gets cheaper, and usually it's really positive for risk on assets. But the point is, this was already baked into the price because people already knew it was happening. So it was of no surprise. The real piece that was going to be interesting to people is what had Jerome Powell to say about future rate cuts. In it, he said another move lower in December wasn't a sure thing. So basically what he's saying is, I know you all think there's another rate cut coming in December as well, and probably many more into 2026, which is the expectation, or at least it was. Since he said this, the market has reacted pretty negatively. Bitcoin has dropped by 6,000 or 7,000, and many of the markets are down, all cryptos are down. Why? Because, again, it was pretty much baked in, fairly certain that there were going to be rate cuts in December, and many expected in the start of the year. Because he's come out now with the sort of hawkish view that there's every possibility that there won't be, the market had it priced in, and some are repricing into it that it may not happen. I still think it will happen, but the markets have reacted negatively, as you would expect from that. There was another interesting aspect to what Powell had to say. So one thing I've been saying for a while is AI in a bubble? There's huge sums of money being put into AI. Some of the top people in AI are saying it's in a bubble, including the likes of Sam Altman, so the leader of OpenAI. So many people are saying it is in a bubble. How they posed this question to Jerome Powell, and he said he doesn't see it as being in a bubble, and it's not comparative to the bubble in the late 1990s. How he sees it as being different compared to the dot-com is, he said, this is different in the sense that these companies, today's companies, Meta and Google and Facebook and OpenAI and all these companies that are so highly valued actually have earnings and stuff like that, he said. If you go back to the 90s and .com, these were ideas rather than companies, so there was a clear bubble there. So basically what he's saying, .com area, which is correct, there was a lot of companies with all these great ideas, but they weren't actually making any money. There was huge money being invested into them. Many had nothing going on behind it, and of course we had the .com crash. He's saying things are different with this, with AI, because the companies that are making these huge investments are also making huge sums of money. So it is different, in his view. What does that mean? Or let's have a look. Well, if you look at the valuations in the dot-com bubble versus today, the heavy blue in the chart here are the multiples of revenue of those companies back then. So, for example, Intel was trading at 47 times its earnings. Microsoft was 60, Oracle 120, Cisco 130. So they were trading at massive valuations. In today's world, many people are saying these particular projects are overpriced, like Google, Nvidia, Apple, and Microsoft. And you can see that Google's at 25x, and the other three are about 33x. So much, much less than before. And in fact, one company is in both, that being Microsoft. In the dot-com era, it was at 60x. Now it's at 33x. So some people would actually say these are trading at a discount. Not so sure I agree with that, but this is the point that's made. This is different. These are companies earning huge amounts of money, and they're spending it. If you look at Meta, Microsoft, Google, Amazon, and Oracle, for instance, they will spend nearly 400 billion combined for the fiscal year of 2025, roughly triple what the group spent before ChatGPT was launched in 2020. So the spending is growing rapidly, and it's at huge sums. And in fact, this week, just between three companies, Alphabet, which is Google, Meta, and Microsoft, confirmed that they had racked up 78 billion in capital expenditures in just quarter three, and that's up 89% from the same time last year. So huge amounts being spent, and it's growing extraordinarily rapidly. How can they do this? And is there a crash ahead? Well, maybe not. Meta reported revenue of over 50 billion in the quarter as it aims to continue spending heavily in AI to power its ad business and user growth. Annualized, that's 200 billion a year being made revenue. Microsoft saw revenue at over 77 billion in the quarter. Again, annualized, that's over 300 billion. And Alphabet, i.e. Google, topped 100 billion quarterly revenue for the first time ever. So again, annualized 400 billion. So you can see these companies are making colossal amounts of money. So what does that all that mean? Well, if we're looking at it, you want to look at what the risk is out there. And AI is absolutely what's driving the stock market at the moment. If AI was in a bubble and was to pop, it would have massive implications on the stock market. It's highly likely you'd see huge pullbacks, 20, 40, 50% or more. If that was to happen, it's highly likely to lead to a recession. Why? Because 50% of all consumer spending is being spent by the top 10%. The top 10% are the vast majority are making their money out of investing in stocks and shares. So if that has a big pullback, their wealth has a big pullback, which means their spending will have a big pullback, which likely leads to a recession. So it's really important for us to have a good understanding of AI, where it's at, if it's likely to be in bubble, and what happens from here. My view is this: there is colossal amount of money being spent by companies who are making colossal amount of money. It's highly likely they continue to do that spending. These companies want to have the best AI and continue moving this forward and spending whatever they need to do that, but they're spending money they're making in the main. And on top of that, governments also want that to happen. So there's almost unlimited money that can be piled into this. Everyone wanting to be the first company, be the first country, be the most advanced. And so I think we see this moving ahead very strongly for at least the foreseeable future. So I don't think we have an AI bubble to pop just yet. I think there's something to pop, but not just yet. And if that continues to lead and overall jobs market and the economy can remain steady, then I still think there's a huge opportunity for a really strong bull market within crypto. What else is happening? So, of course, we had the China tariffs and the big meeting between Trump and the President Xi. So the US and China have agreed a 1-year trade truce after a keenly anticipated 90-minute meeting between President Trump and the President of China. Some tariff rates have been dropped. China's rare earth export restrictions will be postponed, and the tit-for-tat port fees on vessels will also be halted. Trump, in typical format, said if the meeting could be rated from 1 to 10, where 10 is best, the meeting was a 12. Anyway, the point is they believe it's gone really well and that we can sort of almost park this threat coming from the tariffs. So you would say in the last couple of days there's been massively positive news and should be usually positive for risk on assets. The issues or the tariff war with China appears to be abating and put to one side. We've had the rate cut, which is usually positive or should be. And we see that the AI bubble looks like it's going to continue growing for the foreseeable future. This should be usually positive for risk on assets, including crypto. But we also see something on the other side of it. Here's a list of layoffs by some of the biggest companies in the world. You can see the likes of UPS have announced they're going to get rid of 48,000 employees, Amazon 30,000, and you see the rest of the list there. A huge number of jobs being laid off, all while a lot of these companies are very much going down the AI route and perhaps needing less employees. On the other side, gold versus crypto. On the left-hand side here, you can see in 2020, when gold hit a peak and started to pull back, that's when Bitcoin really got going and had huge growth, as you can see in the chart here in the bottom left-hand corner, massive growth after gold rolled over. The question is, now in the top right, gold, has it topped right now? We've seen it go up to about $4,200. It's had a small bit of a rollover. Is that gold's top? And if it is, will history repeat and will Bitcoin take off from here? If it does, there's huge upside from here. But two parts to that. Will history repeat? But even prior to that, has gold hit its top? I certainly think it went up really fast. It's likely to have a pullback. It's had a little bit of a pullback. Will it pull back more? I think there's every chance of it coming back to maybe even as low as 3,300 or even down to 2,800 previous levels. Of course, none of that guaranteed, but ultimately long term, I think it's going to go for new highs. But if it does have that little pullback, maybe that's what's the breather that's needed for Bitcoin to take off. So lots happening. And so what I would say in general summary in all of this is where to from here. So I think in all likelihood, there's loads of positive news has been put out there. People are digesting the fact that maybe there will, maybe there won't be a rate cut in December. I think it's over in the coming days, maybe after the weekend, people will start pricing it in again, and I think the markets will adjust accordingly, that they will price in another 25 basis point rate cut. Of course, it's not guaranteed. The Fed really tried to push back and say, look, it's not guaranteed, but I think people will start to believe that it will be, and if they do, that'll be positive for the markets. All the while, if the tariffs agreements hold, and who knows, but if the tariffs hold and the agreements hold between US and China, that's obviously really positive, and the AI bubble looks like it's just going to keep going for the foreseeable future. This should be hugely positive for risk on assets. What risk on assets? Well, crypto, of course, in general, but what assets within crypto? It certainly appears for the moment that what's driving the vast majority of movement in crypto is institutional bets. At governmental level, institutions, sovereign wealth funds, etc. What are they going to buy? Bitcoin, Ethereum, and other projects that have ETFs. We see new ETFs coming out. The likes of Solana had a really big start, and it's the biggest ETF of this year, I believe, bringing in 70 million in a day or day and a half. A couple other ETFs come out as well, Hedera, Litecoin, more coming over the coming days and weeks. These are the type of projects that institutions are going to come in. When we see the next act come into place, then I think that will allow these institutions to move a little bit out the risk curve. But what are they going to go into? They're going to go into things that can prove financial, that can prove that they've got a product that works, that has real revenue and real value. And what projects are those? In the main, yes, you've got your layer ones, but then you're looking at things like DeFi, lending protocols, and the likes. Are they going to go further out the risk curve than that? Very questionable. Where should you position yourself based on that? Well, if you want to play it at the safer end, you certainly would want to keep it within that basket. Will retail sell out of some of those projects that go up and then move further out into the risk curve? I think that's likely, but it's a longer term play and much more risky. Hopefully you found all that useful, and we'll talk to you all very soon.